What's up, everyone? Welcome to Toxic Hustle. Today is February 9th, 2024. Welcome to Toxic News and Trading, episode 6. Crypto surge, or is it a fake out? We're going to watch how Bitcoin is pumped. We're going to probably figure out why it's pumping, as well as we're going to see whether or not there could be potential for a stall out. All right, so let's get into it. Let's get into the news. Bitcoin right now is topping and running up. It says topping 44,000, triggering a sharp rise in short liquidations. Right now, we're really seeing it at 47. So it surged yesterday to 44,000, triggering a spike in short liquidations. The rebound comes as data from Bloomberg Intelligence shows that BlackRock spot Bitcoin exchange traded fund ETF has now made it into the top 5 of this financial asset class in terms of year-to-date flows. So money is flowing into Bitcoin ETFs from institutional investors, your banks, Fidelity, the BlackRocks, the JP Morgans. They're all lowering their fees to get people's cash flow or fiat to run into these Bitcoin ETFs, meaning people are buying paper. They're not getting the underlying asset, and in turn, not really reaping the benefit of the actual pump. So if Bitcoin does a 4 or 5% surge, these underlying assets are not going to see a 4 or 5% surge. They're going to see a percentage of that, but they're not going to see these surges. So while it seems interesting to buy these ETFs, it is better to hold Bitcoin. Long term, it is better to hold Bitcoin. So what they're saying basically is that there is liquidations happening. People are shorting, or people who are betting on the market shorting or going down bet wrong. And since Bitcoin is now surging, they are having to liquidate or buy back the asset or cash out of their shorts at a higher price point, causing them to have to buy Bitcoin, causing Bitcoin to surge higher. So this has nothing to do with the actual ETFs themselves, but this has to do with the underlying Bitcoin that needs to be purchased. Remember, there's only 21 million Bitcoin. There will only ever be 21 million Bitcoin. And every halving cycle, or every round about 4 years, how much Bitcoin you get from mining it gets reduced by half. So you're seeing a scarce asset get more and more scarce as these companies are buying it up. So this is what's going to cause the spike. So over the next day or so, we'll see the spike. I see potentially, because of this potentially being a short squeeze, that we may see some weakness next week. We may see some weakness. Let's go on to the next article. Analysts expect Bitcoin supply shocks of all supply shocks after April. A crypto analyst is bullish on Bitcoin, saying the market should expect the supply shock of all supply shocks when the network halves its mining rewards in roughly 2 months. The Bitcoin mining event in focus. Talking to TEDx, I guess that's the meeting, believes BTC, talking to X, whatever this is. Well, Ted believes BTC prices will float higher after Bitcoin halves in April 2024, which we talked about in other videos. This event set at the protocol level is scheduled roughly every 4 years, which I just said, or breaks the 240,000 blocks, or after 240,000 blocks. Will significantly reduce can't even talk today, will reduce the amount of coins entering the market. So like I said, every 4 years or so, How much coins are being minted and being created gets cut in half. The reduction of this supply will make Bitcoin deflationary, possibly increasing prices. For any Bitcoin miner, it has to be increased. If I'm buying equipment and 4 years after 4 years before the next halving event and the mining difficulty gets harder, if I don't upgrade my machines, the machines I have from 4 years ago are not mining as efficient as new miners come on the market, making it inefficient for me or not lucrative for me to mine the Bitcoin. This is why I said it's a commodity, because people are buying hardware. Just the same way you have to buy machinery to dig gold out of the ground, the new gold run is buying these machines to mine Bitcoin at more efficient electricity rates. The reduction is the Bitcoin network disperses 6.25 every 10 minutes, meaning 900 Bitcoin is mined daily. After the high halving, that number will drop to 450 or 3 and change. So it's going to get cut. And when it gets cut, that means you're only going to get now 3 BTC to mine this cryptocurrency. And it's not just one person, because there's mining pools. So you're going to see multiple mining pools competing to get Bitcoin. And that's spread across all of these miners that are everywhere. So this is going to be an interesting situation, because now when there's even less Bitcoin, that means it's more of a scarce asset, means after April. Yes, we're going to probably see the halving shakeout and people in the crypto go down for a second, but if dime to dollar, we can look at the chart in a minute. It's going to be, you're going to see the Bitcoin go down for maybe a week or two, and then you're going to see Bitcoin begin to do this super surge. We're going to go into the charts and look at that. Now, I'm not going to talk about this one. I'm saving this for our crypto newsletter, where there's a particular crypto that I'm going to be researching. I'm going to be showing you the research. If you're a part of our newsletter, make sure that you join the newsletter if you're interested in seeing what I'm going to be talking about. But it's going to be only for our crypto newsletter subscribers. Bitcoin price is skyrocketing today. Here's why. We already talked about that. That is, like I said, this is one of the biggest news, is about why is it spiking, and everybody's trying to guesstimate. Shorts are getting squeezed out, and then that's causing a pump onto the price. And then next week, we're potentially getting the shakeout that was supposed to be this week, but everything shifts for where the actual options expiration is. So within 1 to 2 weeks, we're going to be seeing a shakeout, potentially. Let's check the next one. Crypto for advisors, Bitcoin as a building block for portfolios. So what we talked about is more crypto, more Bitcoin is being placed. Sorry. More Bitcoin. Damn it. There we go. More Bitcoin. Check. Crypto for advisors, Bitcoin as a building block for portfolios. So just as we talked about before, more and more Bitcoin is being placed into portfolios now that the ETF has been approved. Again, SEC already announced years ago that Bitcoin was a commodity. So it was only a matter of time till the palms that got greased were going to allow Bitcoin to be an ETF. And now that BlackRock, JP Morgan, and Fidelity all have their hands in that basket, well, now it's a green light for them to take older money, retirement money, corporate money, and place it into these ETFs so they can get exposure. So that's what this is talking about. Crypto Trader says altcoin market cap is about to begin a historic breakout. Yes, Bitcoin begins losing some of its dominance, because people see that, yeah, they can make 2, 3, 4% in Bitcoin, but if you get into certain altcoins, you might get a 10, 15, 20x on, or 100 to 200x on your investment. So that's what they call altcoin summer. Most likely that may begin at the end of the halving and after there's been a shakeout in Bitcoin. We will see. Next is our US based crypto exchange cracks into Europe's fifth largest economy with vast registration. This is going to be Kraken, right? So in the US, we only have two exchanges that, for the most part, have been greenlit. And that's going to be Coinbase and that's going to be Kraken. Now, I typically use Coinbase more than anything else to be able to do my trades because at any given point in time, since they also are partnered with USDC, they are like the 10,000-pound gorilla in the room. Everybody else has been booted to the side or have been beat the hell down. It is the only exchange that has lasted multiple crypto Bitcoin halving cycles. So I just go ahead and deal with, just like you have number one and number two. They are Kraken is number two by default because who else is there in America, in the US, that has a license? So Coinbase and or Kraken is now going, like, starting to spread its wings into Europe, but that doesn't mean that it's doing well here, and it doesn't mean that it can't still get legislation out of existence. They're just trying to bide their time and expanding into other markets so that the effect of the US regulations don't hurt so much. Which leads us to our business, which I should have started with first, but I wanted to get crypto out of the way because we need to deal with a few things that's going on in the business landscape. One, zombie economies are keeping the stock market from really doing any major surges. And what is a zombie economy? Most of these corporations have, or really what we call zombie companies. And these zombie companies had so much debt in a lower interest environment, they were able to take on debt and not really show any profitability. Now, those companies begin to get, as they get shaken out in higher interest in a higher interest environment, you're looking at a situation where they have to now reduce headcount, reduce employees to be able to then make the budgets or to try to meet expectations or not be so lowered in their expectations. Well, with that, as more and more companies are laying off, now people are having a harder time finding jobs. Now, if you're having a harder time finding a job and your credit is at all-time high, what do you have now? You have this problem in which you have all this debt on the consumer level, you have all this debt on the corporate level, and like a zombie, it is just stagnated. It's just dying slow, but not dying at all. And we're seeing that the uncertainty is, how can you have this super economy when people can't find a job, or the job numbers are skewed like a mug because nobody, like, the one job can be placed across multiple states, but that doesn't count as one job. It's now, let's say if you have one job and that job's on a job board and it's skewed across 15 states because it's quote unquote remote. Well, now that's 15 jobs, not one job. That's 15 jobs. And this is where the remote work jobs are disappearing before our eyes. So here's the gaff in the game. As corporations are laying off and they're not filling it back with people, and the jobs that are remote are disappearing, those job numbers are going to also get smacked the hell down. We're going to see that coming in, within the next quarter, in which where the job numbers will be reduced, because if the remote jobs, which have been propping up everything because they've been getting over on the fact for the last 2 years, they've gotten over, sorry, this is a hot jobs market only because the same one job is across 25 states or 50 states or 10 states. They've been able to fudge the numbers, getting away with that. But what if a corporation says, well, not only we're not going to have this job, we're going bankrupt, and the 10 jobs we had that were remote jobs all disappear, but now those 10 jobs that are across 20 states are now all gone at the same time? Do you see that there's a bigger crisis happening, as well as the greatest real estate crisis since the financial crisis. So the great financial recession of 2007 2008 was retail or homes not being valued properly. Well, now we have the same problem with commercial real estate because 40 to 50% of these buildings that you see on the screen are empty. So we're tying everything together. We're tying everything where we're saying, yes, crypto is doing well, but do I see crypto holding on to big numbers right now? I see international money coming in. I see international money bringing in some cash flow and but at some point in time, we may have a situation in where more people are going to start pulling out of the market because they need to pay bills and they can't hold on to crypto while they need to pay bills. So just be ready to see some shakeout within the next few weeks and then potentially another shakeout after summer because bills are getting tighter and tighter, especially around September. And then we still got the October, November dip, but we're going to be closer to bull run at that zone, but we will see. Now, what we talked about yesterday about McDonald's, and I said more fast food chains are going to be raising their prices because of the employment, like their employees need to get paid more money to be there. Chipotle says California customers will soon be paying more for their burritos. That's just not California. That's every Chipotle that has to raise their minimum wage will have to get that money from someplace. Again, go to your supermarket, look at your eggs. Are your eggs $6 for are your eggs $6 for free range? So if you're seeing $6 eggs or $6 and higher eggs, we'll just say $6 eggs, a carton is 12. You're looking at 50 cents an egg. Think about that. When was that even supposed to be a thing? It's the employment situation being brought to the forefront because employees need to get paid more because the inflation is kicking our ass. But at the same time, it has to go to somebody. As they say, crap rolls downhill. So we're going to be paying higher prices, not only at potentially the pumps, but we're also going to be paying that in our food costs. So again, do we see people having the disposable income to place it into commodities or basically high risk assets at this point, speculative assets? We'll see. But I don't really see that. And this is why I'll be using my trading robots to really just trade the microcycles rather than buying and holding. Where it's, hey, we got it at a good price, put it on a robot, try to catch not to say the bottom of the market, but you're gonna have swings up and down, pause. But we're gonna still need to be able to trade within that. That's where using a trading robot helps you just breathe some liquidity in, not just buying and holding, but being a market maker and trading in and out of the cycles. And then the data that's powered the stock market rally is reversing, and it's still possible for the Fed raises rates before it cuts. I'm not going to be so sure of them raising rates before they cut the rates. The reason why I'm not thinking they're going to raise rates is that banking sector, every March, we've seen that there's been issues. So let's wait till March to see whether or not we have to worry about that crap, because as we're already seeing some failures in banks, and as those banking failures begin to, as those banking failures in the regional side of these banks, not your major institutions, but some of these regional banks are having issues, as more regional banks start talking about their credit rating is getting dropped to crap by Moody's, you're going to see more money running from these regional banks going to these bigger institutions and causing these regional banks to get scarfed up and bought up by the JP Morgans of the world. So I don't think we're going to be seeing another raise, especially if they've already signaled they're going to be doing cuts, and they're signaled early of December that cuts were going to be a possibility because they know that the financial sector is weak. They know the regional bank sector is weak, and more money is running out of the regional banks and running into the Fidelities, running into the BlackRocks, especially with this Bitcoin ETF. People are running fast into them, especially if these other smaller regional banks have no access to that, or really don't have anything on their books to give the interest that people want. People are seeing 4% interest rate. I mean, 4% interest on certain asset classes, especially if you're dealing with treasuries. So people are running to yield. As long as they're running to yield, you're really not going to stop a regional bank from losing their customers and client base. Now let's take a look at Bitcoin. Right now we're at 12:37 p.m. Eastern Standard, and we're seeing that Bitcoin is close to hitting a 9% run on the day. It's smacking its head on a monthly line right here at 47,000 and change. So we already bounced. We're already on this monthly line here on the day. So if you can see, we smacked our head against it yesterday. We finally broke through it today, and now it's basically sitting in this gap. Which it tells me, especially with the next line being all the way up here at 61,000, I don't see that being a huge surge. I don't see a huge surge coming in to take that unless there's some huge scarcity event. But this again leads us to what we were talking about yesterday, and that is that there is potential for weakness coming into the cycle starting next week. There's more. This is just another signal that we ran all the way up. We hit our heads on this, and the next big major support line, resistance line, is way up here. Yes, we have some smaller ones, but these get broken through fast, and that's why this is the next real major support line. We look on the weekly. We see ourselves. We're getting ready to sit on top of the 9-day moving average. We'll see if that can really, if we'll keep riding upwards. But again, we're seeing that the next resistance point is way up here. Doesn't look good for it. And then let's go into our monthly. And on our monthly, you can see we're still getting ready to cross for the month into potentially a negative zone. So we'll see. Again, it was going to be crossing. It was going to cross negative, but this whole run up has kind of slowed it down. But momentum and averages is averages. So we'll see. But the next major dip point is going to be in March. So we'll still take a look at that. We'll still look into it as we go about our trading schedule. But again, we're still waiting for next week. But we're seeing, for me, I'm seeing a topping when it comes to just this huge surge up, now smacking our head up against a major resistance line, having broken 1, 2 major resistance lines to then smack our heads on the third one in just a succession of days. That is a surge. That's a quick surge that cannot be sustainable with all the other macroeconomic factors that we're dealing with. So again, tonight I'm going to be doing a video on one of the cryptos that we're looking at to potentially get in at a very low price, under $1. You can see the back end here. It says my courses, but that's where our trading journal is going to be underneath there. And you can see our trading journals here. And then I already have for for February, the trading journal from last night that I did. And there's 2 videos in here for this, for the trading journal yesterday, in which we're talking about XRP and what XRPs bring to the table as far as showing us as a potential signal for a downturn. So if you're interested in being able to see these extra videos that I'm doing where we're doing due diligence on specific coins and potentially buying into those coins, where to buy those coins, especially the one that we're going to be talking about here, that's right now, well, 3 hours ago was 11 cents. I'm sure it's way higher now. Make sure that you subscribe to our newsletter. It's $1.99. Again, that's less than 7 cents a day for you to be able to get the information and the research that I'm working on, where I'm doing the due diligence. I'm looking at it. We're looking at the communities. We're looking at the code, not really the code itself. We're looking at the code bases. So if you're interested in checking this, if you're interested in the newsletter that will be the newsletter videos we're rolling out, please make sure that you subscribe. Your subscription also helps us be able to get into more of these assets where you can do larger. We're not just Bitcoin where you're getting 2%. We are looking for coins that can do a 20, 30, 50, 100x. But we're watching narratives, and you get to see the due diligence and see how we perform and why we're doing it and how we're doing it. So again, just click on the subscribe today. $1.99, and you'll be able to get access to the videos that we're now rolling out, because this is now the beginning of our trade cycle. So we're now just beginning our trading cycles. We've been testing the waters for the last few weeks, but I have not been writing and doing any videos for them. But now I've begun the videos so that you can see which ones we're interested in and which ones we're going to try to buy into the market, which coins that we bought that actually have done well, that you may be able to even at some of their prices are ridiculously low into comparison of where they'll be at the end of the cycle. So that's about it today. I want to thank you for watching the video. I don't want to make this too long. Again, thank everybody for your subscriptions. Make sure you subscribe and share, and I'll be talking to you soon. Peace.